So by the end of this video, you guys are going to learn how to make $200 per day from index fund investing. I hope you guys all enjoy it. If you guys get anything in value out of this video, hit that like button, subscribe. If you guys are new to the channel, new to the team, we talk about everything money, stocks, money management, trading, investing, credit cards, everything money. So if you find that interesting, subscribe and join the team. So guys, let's jump into how to make $200 per day from index fund investing. Let's go. All right, so before we talk about how to make money off index funds, first, we have to understand what is an index fund. Well, an index fund in simple terms is just an investment vehicle that tracks different indexes. Now, indexes is pretty much just like a pool of different companies. The more popular ones and more well-known ones are like the S&P 500, the Dow Jones, the Nasdaq, the Russell 2000. These are stock market indexes, so you can gauge where the stock market's going, has been, and possibly could go. And I know as a beginner that may seem very, very overwhelming, but guys, it's very, very simple. The S&P 500 represents the top 500 companies in the stock market that's publicly traded. Now imagine if you guys wanted to go on and invest into the top 500 companies, it would be very, very overwhelming, confusing, and on top of it, it would cost you thousands of dollars in just shares, and it would cost you hours of your time finding these companies, managing them. So instead of that, you guys could just invest in an index fund that manages it. You still get the same growth, you still get dividends, and you still get diversification, and on top of it, it costs virtually nothing, 0.04%. That's what Vanguard charges for an average S&P 500 index fund. Now the beauty of the S&P 500 is it tracks the top 500 companies, and over the past 90 years, through all the ups, through all the downs of the recessions, the bull markets, the bear markets, the dot-com bubble, the 2008 crash, it's had an average return rate of about 10%. Meaning, if you invest and you just hold it for the long run, on average, you're getting 10% per year on your money, plus dividends. Now the dividends range anywhere from 1 to 2%. And I know you're saying right now, Carter, that's not much, that's only 1 to 2%. Hey, 1 to 2% on thousands or even millions of dollars is gonna add up very, very quick. So honestly, an index fund is honestly just a fund that tracks certain companies. It's very simple. Instead of investing into one company, you're virtually investing into a group of companies. But the beauty of investing into index funds over individual companies, it's a lot lower risk and you still get great returns, dividends, and you don't really have to worry about it. It's less headache. All right, now that we kind of understand what an index fund is, now let's talk about how to make that $200 per day. So the first way you guys could actually go about doing it is off of dividends. Now, dividends is when a company makes so much money, they will pay their investors. Now, since you're invested into the top 500, because we're just gonna do the S&P 500 because it's a staple, it's a GOAT for investing. So all the companies that are in the S&P 500 that pay dividends, you guys will get those dividends. Now, and I know you're saying, Carter, that must be thousands or millions of dollars that you must need. Yes, it's actually $3.4 million in order to get about $1,000 per week. So yes, it's a lot of money, but this is how you guys could reach that. So like I said, investing in the S&P 500, you get on average about a 10% return per year. Now, the biggest thing with this type of investing is consistency. It's like going to the gym. If you go to the gym one time, you feel great, you look the same, right? If you go to the gym 2 times, you work out, you get buff, you get ripped, you lose weight. No, you look the same. Investing and working out is the same thing. You have to go consistently in order to see the results. Investing, the same thing. Working out, the same thing. If you go to the gym 2 times, 3 times, you're not going to see much results. Investing, if you invest 1, twice, 3 times, you're not going to see much results. So here's what you do, is you open up an account with like M1 Finance, Robinhood, a broker that allows you to just auto invest. Now, in order to reach 3.4 million, you're going to need to invest near and around about $500 per month for about 40 years. And I know you're saying, Carter, that is way too much. Hey guys, in order to get things that you've never had, you have to do things that have never been done. So it's gonna require hard work, dedication, time, all that stuff. But you're gonna make it very, very simple. You're gonna open up a Robinhood or M1 Finance account, and you're just gonna sign up with Auto Invest every single week. You're gonna invest $100 a week. You're gonna be investing $100 per week into the S&P 500 that gets on average a 10% return. Now, doing that over the next 40 to 45 years, you're gonna have a total account balance of $4.3 million, which is gonna give you a income near and around $60,000 to $65,000 off of your dividend investing, plus the total principal of $4.3 million. A lot of people love to make investing very, very hard, trying to have you time the market to get in and out with ease, try to trade. No, in order to achieve wealth, you have to invest consistently, and I will say that to my grave, because I am a huge believer in it. There is science, there's data behind it, and on top of that, investing into the S&P 500, most hedge fund managers can't even beat the S&P 500. So these so-called, pros or professionals or people that do it full time, they can't even beat 10% per year. So you might as well just invest in the S&P, sit back, relax, and not have any stress or worry, then try to manage it or trade it or do something crazy like that. Now, yes, I do believe in doing a little bit of both, having a portfolio or an account that's just set up for something like this, and then have a fun one. Have an account where you invest into Apple, Tesla, Google, all that stuff, and just see where it goes. That's what I do. That's why I love investing, is because you can do that. You can have an account strictly for long-term growth, then you can have one for fun, a growth, a risk one. And I think that's my approach with investing. And that's honestly how you're gonna see that $200 per day, is just off of consistency and time. Starting out, you have time on your side, so if you haven't started, start investing now. So guys, I hope you guys enjoyed it. We'll see you guys later. Remember to stay happy, stay positive, and stay safe out there. Take care, everyone.